Okay, this is the BBR strategy. It's the entire breakdown of what I look for every single day. It's four things. It's super simple, and this might be kind of quick. Stick with me. I'll give you ways to do some homework. You guys are gonna have to do homework after this if you really want to learn the strategy. And yeah, let's just straight into it. So, what is BBR? What is the BBR strategy? What does BBR stand for? BBL? Is it stupid? Actually, I didn't even realize it was BBL until I started getting comments on it. But anyways, BBR stands for breakouts, bounces, and rejects. It's the three things I look for every single day. It's what I looked for before I even kind of had this whole strategy put together. I was looking at it without even realizing it, right? But BBR stands for breakouts, bounces, and rejects, and it's what we look for, and it's what I look for. One of these three things every single day. It's a repeatable approach to trading NQ and ES, and it provides a valid setup almost every day. Almost every day, this will provide a good entry. Just a side note, these three moves revolve heavily around London session liquidity, as London session gives us a good range to be able to read what the following session wants to do. Following session is, of course, New York session, which is what we trade. So the London session range will always give the New York session, will give us a good read in what will happen after we take London high or London low, and what will happen after that. Right. So what do I mean by this? Let's just get right into it. So the first B is breakouts, the first B in our strategy. Now, this could be in either direction. It could be a long trade or a short trade, and it's a continuation style of trading. We could take breakouts when we have the confirmation that the opening move, the move at New York Open, will continue trading in that same direction. Now, it doesn't necessarily have to be the move that happens at New York Open. We can, let's say we make a move down and then go back up. We can take a breakout on the upwards trend, if that makes sense. And we'll get more in detail as far as that goes, right? So what gives us confirmation to take breakouts is super, super simple. This strategy is super simple. Confirmation number one, we need a 5-minute candle close on the opposite side of either London low or London high. So all of our trades are always going to be based off London low or London high, unless we are past London low or London high. Then we'll look at other drawn liquidities such as unmitigated gaps, recent swing high or lows, PDH and PDL are good ones, previous day high and low. But if we are not way above London low or London high, we'll look for the reaction at London low or high. And ideally, we want to get our trade on the day should be ideally based off either a London low or a London high, and we're done for the day after that. Now, if we don't get confirmation for a trade or it just runs right past London high and we go to PDH or PDL, then we could look for the same exact thing, a breakout, bounce, or a reject at those other draw liquidities. But ideally, we get it at London low or London high. So confirmation number one for a breakout. We need a 5-minute candle close on the opposite side of either London low or high. It could be London low or high because we could take a continuation short or a continuation long. It doesn't matter. Confirmation number two, we need a slight pullback to form, and we need a slight pullback to form a fair value gap, and then thereafter turn that fair value gap into an inverse fair value gap in our direction. So let's say we get a 5-minute close above London high. We then need a pullback to London high. So we closed above it on the 5-minute chart. We need to pull back on, let's say, the 1-minute chart. On that pullback, on the way down to that retest, we form a fair value gap. Now from there, we need to retest that London high or low if we're taking a continuation short. But for this example, we're taking a continuation long above London high. So on that pullback, we create a fair value gap. We bounce off that retest of London high, and we inverse that fair value gap, hence forming inverse fair value gap. And I'll go into this in some examples in the chart. It'll make a lot more sense for you guys once I get into the charts. But for now, just hang in there with me. So we get a 5-minute candle close on the opposite side. We get a pullback to that level. We get an inverse fair value gap out of it. And boom. That's the only confirmation we need to take a continuation long or short. That's it. Just a 5-minute candle close and an IFEG after a pullback to confirm continuation. Now, of course, there is many of other confluences, and we'll go over that. But these are the only two that I really need. If I get these two, and I'm very confident my draw on the other side, I'm probably going to take it. And this IFEG could be on any time frame from the 5-minute to the 30 seconds. So it could be a 5-minute IFEG, 4-minute, 3-minute, 2-minute, 1-minute, or 30-second. It doesn't matter. The type of IFEG is important and discretionary, and there are tons of other confluences, like I just said, and I'll be looking at before taking my entry. I will go through these confluences later on in this slide and then show some examples. All right, so that's B, breakouts. First B in our strategy. It's essentially just a continuation long or a continuation short after we break above or below a key level. What is the second B in our strategy? The second B is bounces. So think of it like a ball. You drop a ball, it finds support at the floor, and it bounces back higher. We're looking for the same thing on a chart. So bounces refer only to reversal long entries. So these are all reversal long entries, meaning we're looking for price to come down and then take a long trade. So a reversal in price from bearish to bullish. Now, what gives us confirmation for a bounce? Also simple. 2 confirmations, that's all we need. We must sweep London low or any other drawn liquidity, unmitigated gap, swing higher lows, previous day low, right? A sweep refers to us trading below the level. So let's say we're taking a sweep of London low, a bounce of London low. We want to see price go below London low, reclaim it, and that's a sweep. It's just when it trades below and then reclaims that level. It takes all the liquidity that's sitting below that low. So after we get that confirmation, we must wait for confirmation number 2. And it might happen at the same time. The reclaim and inverse fair value gap might happen at the same time. But the second confirmation, pretty much the same as the continuation long or short. We need a IFEG on any time frame from the 5-minute to the 30-second. This should say 30-second right here. It's pretty simple, right? Just a sweep, a reclaim, and then IFEG. Now, of course, just like before, many other confluences will make me more confident or less confident in the trade, and I'll talk about those in a little bit, and that's where my personal discretion comes into play. That's where the value of trading live with me comes into play, because I have other confluences that I'm looking at in order to take a trade, and I also have market experience, right? When I feel a little tingle on my left nut, I might know where the price is going. Not actually, you know what I mean, though. I might have to cut that out. All right, rejects. Finally, rejects is the R&R strategy. It's going to be the complete opposite of a bounce. It is a reversal short setup. So instead of taking a reversal long, reject is the complete opposite. It's a reversal short. So when do we take a reject? It's the same thing as a bounce, but opposite. We must sweep a London high or any other drawn liquidity, so unmitigated gap, swing lows, highs, and maybe previous day high, right? Once again, a sweep in this case refers to us trading above the level and then failing the level, so failing back below it. Confirmation number 2, same exact thing. We need an IFEG to form on any time frame from the 5-minute to the 30-second. For the last time, we need more confluences than that sometimes, and that's where my discretion comes in, and we'll get into those in a second. So, we have bounces, we have breakouts, we have rejects. That's it. That's the only things we look for every single day. It's super simple, and it works. I get paid out on it, and every trade I take on these accounts that I get paid out are taking on live, so you guys can see me take these trades. So we look for 4 things: reversal long, reversal short, continuation long, or a continuation short. Now, what are some rules we must follow, and what other confluences should we be looking for? So rules we must follow. Rule number 1, only take a trade if realistic potential reward. This doesn't mean, oh, maybe we go for 450 points and it's 3 times my risk. No. What is a realistic spot that price may go to, realistic target, that is at least 3 times our risk? If we have that, we're good to go. We can take our trade. Now, this keeps our risk reward high and gives us a great equity curve over time, as displayed by my backtesting videos on YouTube, which I only have 1 right now, but I do plan on making more. They're just very, very time consuming. I've been focused on other things for now. Rule number 2, don't forget rule number 1. All right, so there's only 1 rule. That's it. So just follow the strategy. Make sure you take a minimum 1 to 3 risk reward entries. Now, it is okay if you take partials or trims, right? If you take half your position off or a quarter of your position off before 1 to 3 risk reward, if you're taking off at a valid level, like a 15-minute unmitigated gap, 5-minute unmitigated gap, 1 hour unmitigated gap, London high or low, previous day high or low, daily unmitigated gaps, whatever the case may be. If you have a reason to take a trim or a partial off, then that's okay. You could do that. Now, here is the juicy part. This is honestly the most important part. What are the confluences that help us be more confident or less confident in that trade? What confluences do we look for? I just went over this whole slide in detail, but it wasn't recording, or like the screen paused. But I'll go over it again. Okay, so confluences. To give me more confidence in my trade or our trade, I will look for the following confluences. Now, this is in order. Kind of. I'll explain. IFEG, good draw on liquidity, S&T, the VIX, Mag 7 stocks. These are all super important. The last one, not as important. I'll get into that though. But number 1, IFEG with good TTT. TTT stands for time to take. It measures how long it takes for an inverse fair value gap to form after the fair value gap forms. So what do I mean by this? Well, the fair value gap forms. After that fair value gap forms, the measurement starts after the next candle. So ideally, you want a fair value gap with like 3 candles or less TTT. So in 3 candles or less, that fair value gap gets inversed. Now, it doesn't have to be. If we have a lot of other confluences, I'm fine with taking it if it takes like 10 candles or more. Obviously, the quicker, the better though. So that's confluence number one. We want momentum and aggressiveness as well. We don't want a big, if we're taking a bullish inverse for value gap, we don't want a big top side wick on that candle that inverses. We want to see a big body close, right? Second confluence, a good draw on liquidity. So how confident I am price is going to my draw. I get my draws from unmitigated gaps, equal lows, equal highs, market structure higher lows, NWOG, new week opening gap. Session highs or lows, which is PDL, PDH, London high, or London low. My favorite draw on liquidities will be London high, London low, PDL, PDH. And 4-hour or higher unmitigated gaps. The higher the better, of course. Weekly, daily, monthly even. I'm going to be much more confident. Equal lows and highs I like a lot too. NWOG and market structure higher lows, yeah, they're okay. I'll still use them, but they're not my favorite. Now, when some of these align, like today they aligned, oh, beautiful draw. So if we have equal lows that aligns with a unmitigated gap, come on. It also aligns with like session low or high. Like imagine we have equal highs at London high and it's a 4-hour unmitigated gap. We are 95% sure, I'm 95% confident price is going to that level. Another confluence is SMT. The higher the time frame, the better. Of course, if we have daily SMT, it's going to be much better than a 1-minute SMT. But even a 1-minute SMT gives me good confidence in that trade. Obviously, the higher time frame, the better. Now the VIX. The VIX is super important, and not a lot of ICT traders talk about this. I wouldn't classify myself as a full-on ICT trader. I use ICT as confluence. As you see, all my confluences have to do with ICT, except for these two. And this is what differentiates me. So the VIX is the volatility index. It basically measures how volatile the S&P 500 is. So it's opposite of ES, because when ES sees downside, we're usually more volatile, and so the VIX will go up. So it's opposite. So how do I use this? For an example, let's say ES is going higher. Well, the VIX should be going lower, because when we're going up on ES, usually the volatility is low, so the VIX drops. If the VIX does not drop and ES goes up, there's a good chance ES might reverse, and we could take a reversal short. So we could take a reject. Now, if ES is going lower and the VIX is not going up when it should be, the VIX should be going up if ES is going low, then there's a good chance ES may reverse and we could take a bounce. We take a reversal long entry, right? So that's how I use the VIX. And then the Mag 7 stocks is very similar. Mag 7 stocks is Tesla, Microsoft, Google, Amazon, Nvidia, Meta, Apple. I think that's all 7. So I want to see alignment with NQ. There shouldn't be a divergence. If the Mag 7 stocks are going higher and NQ is just sitting flat, there's a good chance NQ will probably follow through. If Mag 7 is holding really nice and NQ is going down, there's a good chance we see a reversal long entry on NQ, and then vice versa, if that makes sense, right? And then the last confluence are change in the state of delivery, break of structure, or market structure delivery. These aren't that important. You rarely hear me talk about them. You can look up on YouTube, what is assist, what is a BLS, what is a market structure shift, just to get that, just so you know. It's good to know, right? But not really important. You'll rarely see me talk about this, and if I do, it's probably just a change in state delivery. But delivery from a higher time frame for value gap is important. If we're delivering from a 4-hour gap and we have other confluences, that gives me a lot of confidence. If we're delivering from 1 hour or daily, even more, or a daily or weekly, even more confidence, right? So those are my confluences, pretty much in order. Now that's it. That's my BBR strategy. So we're gonna go look at not real time, but we're gonna go back, look at real market examples, and I'm gonna find these with you guys live. I didn't find these beforehand. I'm gonna find you with you guys live. But first, it's hugely important. Let's talk about risk management. Now, I was on this slide when I realized the video was paused, but a couple things to keep in mind to be able to get the most out of the strategy. First of all, if you can't manage risk, and I'm sure you've heard this a million times, but if you haven't, if you cannot manage risk, you cannot trade. You will never, ever, ever be profitable if you cannot manage risk. This should be number one priority. Doesn't matter what strategy you trade. Doesn't matter what you trade. Doesn't matter how good. You can know where the market goes every single day. If you don't manage your risk, you will not make money. That's it. So it doesn't matter what strategy you trade, but especially for this strategy, this goes for all strategies, but especially this one, you must be okay with red days, and you must be able to walk away red. We have a lower win rate strategy, but a higher risk reward strategy, right? This means we don't win 80% of the time. We don't win 90% of the time. Our win rate is around 50%. But in the long run, this is better because our risk reward is 1 to 3, and this chart will prove it to you, right? So this strategy will stack green weeks and months, but keep in mind, average win rate, like I said, is around 50%. So be prepared to lose half as much as we win. If you can't do that, you can't trade the strategy. But this strategy will produce better yields, better returns than a high win rate strategy, lower risk reward. That's just math. It's just math. It's facts, okay? So if you want to make money, I know I want to make money, then you should trade this strategy. Here's why. Can I pull up a drawing tool? I don't know how to pull up a drawing tool in here. All right, I'm just follow my mouse here. So mathematical expectation. This measures, how mathematically correct the strategy will be over the long run, right? So if let's say you have a 90% win rate and a 1-to-1 risk reward, your expected EV is 0.8 or 80%. It's 0.8, so it's pretty good. All right, still a good strategy. 90% 1-to-1, 80% 1-to-1 is 60%. That's okay, right? You can find better though. Now what we do is a 50% win rate, but it is a 1-to-3 risk reward on average. We have a 100% mathematical expectation, which is a 1.0 EV. That's very good. That is a lot better than a 90% win rate out of 1-to-1, right? Even if you're trading a 99% win rate, which is impossible, you won't find a strategy like that. And if you do, Citadel is hiring, you know what I mean? And you still won't have a better mathematical expectation as me because my winners are 3 times my losers, where your winner is only 1 time your loser, right? And I have to also point out, I've seen guys market on like Instagram and stuff that their win rate is 90%. I guarantee you, if you join their Discord, because we are trading with discretion, and this is natural, even me, this goes for everyone, your win rate will drop a little bit in real-time market, right? So backtesting, my win rate is about 55%, but in real time, it's really about a 48 to 52%, right around there, right around 50%. That's why I say it's 50%, but it's really 55% if I'm lasered in and I'm focusing my backtesting session. But real time, we have emotions. We're human. We're trading with discretion, so that happens. I personally want to get my win rate up to 60% and still have a 1-to-3 risk reward, and I think I could do that. And you can see expected value will be a lot higher. But for now, we're sitting right around 50% and a 1-to-3 risk reward, which is still really good. That is better than, even if you have an 80% win rate with a 1 to 1.3, it's still 16% better our strategy. So that's the math behind it. And I also want to show you this chart. This shows you the probability of, get the fuck out of the way, the probability of seeing at least X consecutive losing trades within a sample of 50 trades. Now, this goes to show you that you need to be managing risk, especially with a low win rate strategy. There's a 50%, almost a 50%, there's a 30% chance that we lose 7 trades in a row and within a sample of 50 trades. So you need to be prepared for this. There's a 97% chance we lose 6 trades in a row within a sample of 50 trades. That is going to happen. 97% chance, you're pretty much guaranteed, right? So we need to be prepared for losing at least 8 in a row. That's where I like to be prepared for. So if you're trading a $50,000 account with $2,000 worth of drawdown, risk 15 point, or do 2,000 divided by 8. Fucking brain fart. So if I do 2,000 divided by 8, that's $250 a trade. So that's right around where I risk. I risk 300, so maybe I'm a little bit more risky. But the chances I blow my account when I'm risking $250 or $300 a trade is about 4%. It's so low. So you need to be prepared for this. Don't go and risk $500 a trade because there's a 100% chance that you lose that drawdown. Now, you might make money first. You might get a winning streak first, and then you'll be good. You'll be solid. But if you hit a losing trade, if you hit a losing streak, if we hit a losing streak, you're going to blow your account. So be prepared for drawdown. Risk about $250 a trade if you're trading with a $2,000 drawdown account. That's super important. I can't stress it enough. Anyways, we spent enough time on risk management. Let's go right into the chart and let's try to find some examples. So let me pull up this chart. All right, you guys should be able to see my chart. This is today's action. I literally haven't looked at it for any examples yet. So I'm just going to go on NQ and I'm going to go back in time and see if I could see something. So right here looks like a good example. Let's put this in replay mode. And let's go to here. So as always, you guys know we mark our London low and our London high. In this case, our London low goes here. And our London highs, like right here. We have PDL up here. All right, so that's pretty much it. We have previous day low down here as well. All right, and on ES, pretty similar, except we have PDL right here. Don't just ignore the 4 hour and mitigate it. I'm not gonna go ahead and change that, but London low and PDL all the way up there. But already off the rip, what do you see here? Off the rip, let's get rid of this. All right, let me just change these so it makes more sense. So this is an example of the second B in our strategy, right? Second B in our strategy, which is a bounce. Let me just mark these levels real quick. PDL, PDL. Okay, so we have ES on the right, NQ on the left. So off rip, what do we notice? Well, we get a 5-minute candle close below London high. Cool. Now what are we looking for? Let me go back. We are looking for a retest of London low to go short. That's what we look for after a 5-minute close, right? But we need confirmation on the retest. And if we don't and we get a reclaim, well, then that will now be a what? A sweep of London low. Let's actually have these fucking opposite. Let's just say London low and London high. Now, if you guys notice the SMT here, congratulations. Let's go right here. Let's go to the 1-minute chart so you can see it better. Boom. So where's the SMT? NQ does not take previous day low and ES does. This gives us a high time frame SMT. Boom. Love it. That is a good confluence. Now we still have previous day low below. We still have a 5-minute candle close. So if we get confirmation on the retest of London lows, we could take the breakout continuation short. But we need confirmation on the retest. If we don't get confirmation and instead we reclaim, we can look for an inverse for value gap to go long. Now we have this 30-minute or this 3-minute. Do we have a 30-second? I think we do. Oh, that's beautiful. Guys, when you see a gap that lines up with a reclaim of London low, that is money. So we have a 30-second fair value gap. This could go either way. This could do one of two things now. We got the 5-minute close, so we could technically look for the retest. We form a fair value gap on the way up, and then we get a candle close below this, turning this into an inverse fair value gap, and we could take a short that looks like this. Boom. Nice 3.12 short. However, look what happens here. This is why we always wait for our confirmation on the retest or on the reclaim. Because right here, we create bullish SMT, and then we get this. What is this, guys? This is a beautiful momentum candle. We get an inverse, and we get a reclaim. What do we need to take a reversal long entry? Well, all we need is a sweep of London lows, which is what happens when price trades below it and then reclaims. That is a sweep. Confluences. We have good momentum inverse for value gap. We have bullish SMT on the high time frame. Beautiful. That's all we need. We can go ahead and look at the Mag 7 and look at the VIX, and I guarantee you it backs this move, and I know it does because I just back tested this. Or I just went over this day in trade recaps. But this is a beautiful long entry right here. And we actually missed this because I wasn't looking at 30-second. But if I was, we would have smacked this, right? Target, London highs, for about a 2.7. Notice our potential reward is not 3. So what do? Just move it up to 3. Just move it up to 3. There's a good chance it hits, and we're taking partials off either way. We're going to take like 75% of our position off at London high. And then the rest we can use either PDH, which is all the way up there, which did end up hitting, by the way. We hit PDH. So you could do that as well on the runners, which would be a 5.52, but I'll probably just get out at 3-1 and call it a day. Anyways, this worked perfectly, as you can see. Boom, right to target. So that is an example of a bounce. Let's keep looking for more examples now. Let's get rid of these drawings. Let's go ahead and hunt for some more examples. What's the 5-minute chart? So that was a bounce. Let's look for a reject, and let's look for a continuation long and a continuation short. So it looks like this was a good example of a reject. So we have London high. We have, this is London low. Ooh, check this out. We have equal lows at London lows. Beautiful. And we have Asia lows, and we have PDL. Boom. Beautiful. Let's put this in replay mode. Let's go to right here. Now I guarantee you we get confirmation short this. I don't know. I don't remember this. What is this, Monday? Oh yeah, Monday was beautiful. I remember Monday now. So same thing on ES. Boom, this is London high. Boom, this is London low. Okay, I'm not even gonna mark the other things out. You guys will get the picture. So what happens off open? We go ahead and we sweep London high. That is the first confirmation we need to take a short. Now I want to see them in alignment though. I want to see NQ and ES align. So I don't take the short on NQ. I want to see ES fail London high first. This will confirm the sweep of London high. For us to take the R in our strategy, which is a reject, it is a reversal short entry. So right here, we get I took a 3 minute and a 5 minute. Yeah, we took all of these. So I think I took it on the 2 minute or the 1 minute. I think I took it on the 1 minute. Yeah, I took it on the 1 minute. So once I think it was literally right here. Yeah, it was. So stock goes back above this fair value gap. Just right here. And I think we might have had bearish SMT. Did we? Yeah, we did. So check this out. Once again, we have a confluence with bearish SMT where ES took Asia highs. This is Asia highs right here. And NQ did not take Asia highs. So boom, SMT. That's one confluence. Confluence number 2 is our confirmation of short. It's our inverse for value gap, and it's our sweep. Confluence number 3. Confluence number 3 is, once again, I just remember this. I'm not going to pull it up, but the VIX and MAG 7 were both backing this move. Confluence number 4, we have a good inverse for value gap. This is quick, and this is with momentum. So now we can simply take and we have good draws below, by the way. We have equal lows right here at London lows on NQ, which I'm very confident that we hit. And then Asia lows below, and good risk reward. So we took our entry, and this smacked. Took a little while, but it smacked, right? And so we got an example of a reversal long. That's a reversal short. Now let's look for a continuation long. So that way we could tie everything together, or a continuation short, doesn't matter. This day might have gave us a good one. No, because we took London lows first. Honestly, today was a good example. Okay, here's an example where we didn't take that high first. So we're looking for a continuation short below London lows. So we get the 5 minute candle close. Now we just need a inverse for a fair value gap with good TTT. We need the VIX to be following suit. We need the MAG 7 stocks to be following suit. If everything's aligned, we are good to go. We have good draws below, by the way. We just need an inverse for a gap here. I think we did get that here. Nope, not quite. Okay, we're just dumping here. All right, do we get one right here? What's the 1 minute? Yeah, perfect. Okay, I actually remember taking this exact trade. It's funny. I remember these trades because I backtest so often. We had a 4-hour unmitigated right here, which is pretty good. We have any 1-hour unmitigated? No, but we do have PDL down here as well. Let's pull this up. So this would have been our short entry. Stop loss would go to the first candle that tapped into it. And risk reward is not good here, so we'll go break even into that. And then we'll just target a 3-to-1. And as you can see, it worked perfectly, right? And this is why I love my strategy. It's so simple. I can look for these trades all day long. And yes, this is hindsight, but I promise you I do it every single day on live. It's the same thing. Let's go to this day. See if we can continuation long entry this day. It's a 30-second. Oh, I remember this day. This is when we had that news at 10 a.m. So no entry here. Technically, you do have an entry, but these wicks kind of throw it off. You do have like a 1 tick inverse value gap right here, but it's like, are you really taking this? That's just an example where we don't get our confirmation, and sometimes that's how it is. Let's see if this day gives us one. Yeah, this day was beautiful. I actually remember this day as well. I got hit break even on this trade. Boom. So this is a continuation short entry. We got a candle close below London lows. All we're looking for now is a retracement to form a fair value gap, and then we're looking for this fair value gap to get inversed, right? So these are continuation short entries. We look for a continuation long entry, and that's it. So 3Bs on our strategy. We look for 4 things every single day: a breakout long, a breakout short, a reversal long, or a reversal short. I hope you guys found value in this, and I have much more examples of the BBR strategy. Go to trade recaps in the Discord. That whole channel is so valuable. You will see me take these trades, and these are day recaps of doing this exact same thing. So you'll probably find so much value from all those trade recaps. I guarantee you, if you watch all of them, you will know exactly what I'm looking for every single day, and it'll be easy for you. If you made it this far, I appreciate you watching all the way through. I hope you gain knowledge. I hope you know my BBR strategy inside and out now. If you aren't in the Discord already and you want to join, there is a free week trial. I make it free because I know the trust in this space is hard. It's hard to trust people. Everyone's a guru now, right? But I track every single trade I take. I track in a spreadsheet on live, my entire screen to share with you guys, so you know I'm credible, you know I'm trustworthy, you know the strategy works. And yeah, first 7 days are completely free if you want to check it out. I have a completely free tier as well if you just want to join for free, kind of get some free content as well. If you just want to keep watching the YouTube, hit the subscribe. It's completely free. Helps me out a ton. I appreciate you guys, and I'll see you in the next one. Peace out.